please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I think good growth rates coming through from better operational management.
Well, sorry, we had to cut you off. Thank you very much, Deepan. Actually, my reference was to the future group stocks. But for the moment, let's concentrate. It's a slightly red start, 0.25% knocked off, but 0.5% taken away from the Nifty Bank. And therefore, let's start with what are the red stocks in the banking space. First, of course, BP, HP and IOC are starting with about 3 to 5% in terms of cuts. ICICI Bank is seeing profit taking 1.2% lower. HDFC SBI follows suit with about 0.8 to 0.7% in terms of losses. And then come M&M, Tata Steel, HDFC Bank, Ultratech Cement, Maruti, Axis Bank and the like. All of them down about 0.5%. But HP is really taking it to the chin with 4% knocked off. And BP IOC also almost 4%, 3 to 4% gone. Hindalco is bringing up the green end, Bharti, HCL Tech, TCS, well, basically the tech stocks. HCL Tech, Tech Mahindra, TCS, Infosys, all of them in the green between about 0.7 to 1%. So very clearly not banks, but yes, IT. That's the verdict of the market in the first 1 minute of trade. Midcaps?
Well, the midcap index itself is a bit soft, down about 40 odd points. The market breadth is split right down the middle. You have a lot of these stocks that get impacted by higher crude that's under pressure. So all oil marketing companies, HPCL, BPCL, as you mentioned, MRPL, Chennai Petro, all down and out in trade this morning. Sadbhav Infra is down almost about 2 odd %. Aviation stocks are under pressure. Interglobe Aviation is now down almost about 2 odd %. Tire stocks are under pressure. CAT is down almost about 1.5 odd %. Jet Airways is down as well. So that whole pocket, you know, that's susceptible to higher crude prices are under pressure. Vakrangi has fallen some more, so that stock is now down almost about 5 odd %. But enough with the losers. Let's talk about some gainers as well. Jubilant Foodworks has, I think, made an attempt to put on some more weight this morning, so up about 0.2 odd %. Syntex Industries up 13% post its numbers, but it's a 19 rupee stock, so keep an eye out on that. You have Automotive Axles. I had mentioned that earlier. The Kalyani Group company, very good numbers, so that stock is up almost about 5% right now, and a couple of more names like Phoenix Mills also doing pretty okay, up about 0.6%. However, Whirlpool's numbers were in line, so that stock is slightly down. ABB is actually down about 1.2%. Blue Dart also, that's slightly soft this morning. Otherwise, for the market, it's consolidating but with a negative bias.
Yeah, so you know, Sonia, it's going to be in IT versus banks play, which is going to play out. The Bank Nifty was due for 200-point correction, now down about 120 point. Nifty down 14. I think the stock of the morning for me on the index is HCL Tech. That's opening about 1% higher, right at its 200-day moving average, and that one is seeing a big positive start. It's corrected a bit, and of course from the lower level. In fact, the entire IT pack, you've seen TCS, Infosys, all of these rallying, but HCL Tech is the one which is bouncing from its 200-day moving average, so that's important. Ashwini, your thoughts on market opening and what would be the trade to chase today?
Expecting IT to do what it's doing today or yesterday. So right early in the morning, get long on Tata Elxsi, NIT Tech, we've done that. Possibly all tech stocks will have a fairly good day. The Nifty may not do a whole lot because banks will balance out, but I think today is going to be a fairly strong day on IT.
Okay, so you start with long trades, not short trades, Ashwini?
Yeah, long trades because at least for the first couple of hours, IT and banks will balance out each other because IT is in a very sweet spot, strong trend, corrected, 4 or 5 sessions. And today, the way it's opened, 100, 120 points higher, generally you get follow through when such moves happen.
No, what I was asking is, will there be a short trade in the Nifty Bank?
See, it's not really down. I mean, it's like 100 points lower and it's a strong index. So, maybe the retail banks make a comeback, etc. In a bull market, you have to avoid shorts till, there is follow through.
Okay, well, you also have a couple of these mid-cap IT names that are hitting new highs. So KPIT Technologies at a new high this morning, up 1.5%. First Source has been moving with so much strength. I mean, this year it's put on 65% gains for First Source, now at a new high.
Today was a day when you could have just planned it. Banks versus IT. I mean that was basically a bit of a no-brainer for starters. Of course, mid-cap IT doing well as well, but in the large-cap IT also now we're seeing big moves. That just pull out some of these names: TCS, Infosys, HCL Tech, intraday. So some of these stocks now really making a big move. This looks like, at least for starters, a bit of a trend day on IT. And now IT's weight is quite okay in the index. And it's corrected a bit. It's corrected to between 20 and 50-day moving average, the Nifty IT that is. So a bit of a gap up is what you're seeing now on that one.
Okay. Well, Prakash Gaba, your thoughts on how to approach the market, and more importantly, any IT names that you'd want to move on today?
Certainly. I think the market should be up from here. It can climb to around 10,750 zones or so. Looks up. So I would like to go long. I think IT names you mentioned, KPIT certainly is looking good. I think it's going to climb to around 275 zones. I also like metals. Okay. Metals could be...
Prakash, I think your mic isn't working for the moment. We're just coming back to you in a second. Ashwini, what's your big call for the day?
So big call is get long on these mid-cap IT stocks that started moving yesterday. I think today they could move up throughout the day. So whatever is taken off from these rate sensitives and oil sensitives could go into IT.
Okay. Prakash, you were finishing your trade.
Yes, I think KPIT certainly is looking good. KPIT can climb up to around 275 zones. I also like the metals, Jindal Steel and Tata Steel. I think Jindal Steel can see a move maybe up to around 270 zones. And Tata Steel, yes, heading to 620. Metals are looking good.
Metals are looking good. Okay, gentlemen, thanks a lot for taking us through the market opening. Of course, we'll talk to you around 10 a.m. We now invite our market master for the day, Pramod Gubbi from Ambit, is with us. Pramod, good morning. So your thoughts on the kind of macro moves that we have seen over the last 1 month or so, and do you reckon that this market can eke out some more gains over the next few months?
Yeah, it's been a bit surprising, particularly given how yields have performed, currencies have performed, EM bonds have performed. But I guess some of the result season rub-off has also had an effect on some of the larger cap names, as people sort of move out of small and mid caps and larger caps, and that sort of movement is shown at the index level as well. So once the dust settles down on the earnings season, perhaps some of the other factors that have been driving the markets in terms of the macro factors will come back, and that's when we'll see the impact of what's happening in the global bond markets play out in the emerging market risk assets as well.
Good morning, Pramod. But you don't think growth is strong enough to withstand these higher prices of commodities? Are you not a buyer at this level?
Yeah, I mean, buyer would be mostly from a bottom-up perspective. I think on a micro perspective, we're clearly getting into a better shape in terms of earnings growth. We're seeing many more companies across diverse sectors demonstrating that. But from a market as a whole, I think the macros will overweigh. There's absolutely no doubt that growth has picked up at the economy level, but everything else that comes with growth is also picking up. You're seeing inflation picking up. It is an election year. There is a bit of fiscal profligacy. Current account deficit is picked up again, related to the pickup in local demand. That has had its own effect on interest rates and the currency itself. So, other than growth, every other parameter which was looking benign over the last 3-4 years is turning adverse. So at the macro level, you need to take cognizance of that. Having said that, the benefit of this pickup in growth towards corporate profitability and earnings growth should also be looked at with a positive view. And for the bottom-up investor, there could be opportunities where there is enough earnings growth visibility to justify the valuations that we're facing today.
Do you see earnings growth visibility in sectors like IT? Because that seems to be the common view now, Pramod.
Yes, we've been quite positive on the sector. Of course, valuations aren't that attractive as they used to be about, say, 12 months ago. But clearly, a lot of things are stacking up for the sector in general, but particularly for some companies which have made ahead of the curve investments into what is broadly called digital at a time when IT spends, particularly in the West and in the US, are picking up, and you have a tailwind in the form of currency. So to that extent, you'll have many legs of earnings growth for the IT sector.
Okay, Hindalco is now reacting to that Novelis numbers, 4% higher. Thoughts on metals, Pramod? We had a massive run in 2017. Has been, there's been some consolidation, but now stocks once again breaking out.
Yeah, I think given global growth situation, which is fairly benign and strong across both developed and emerging markets, commodities in general should do well. Yes, again, perhaps we are in the late stage of that cycle. So commodity stocks, metal stocks in general should be a straightforward play on those commodity prices, and we continue to be positive on that.
Yeah, and I guess the landed price will also be a big protection for Indian companies. Rupee now at 67.40. It's not the worst performing currency now. It's almost standing shoulder to shoulder with the Korean won, and even the yen has, of course, depreciated. There are other currencies, Filipino peso and the ringgit, all of them down about 0.2. So we and the Korean won are the worst performers. Okay, now the rupee is the worst performing currency. Usually the RBI intervention is kind of dependent on whether rupee falls alone or rupee falls with the crowd. Yeah. If it falls with the crowd, they don't intervene. You don't want to stand against global tidal waves. But if there is an extended fall in the rupee, then you can expect, like yesterday you saw the sudden rally in the rupee. You never know what happens today. Pramod, what about the consumption space? We saw some excellent numbers, Jubilant and the like. Even Godrej Consumer and the other old consumer stocks did well. Is that your choice at all?
Yeah, absolutely. I think consumption will be the focus area, and in a year like this year, where we have a slew of state elections and ending up in a general election 12 months from now. So I think consumption in general, in particular, I think rural consumption should see disproportionate pickup in growth and flowing down to earnings as well. So yeah, I mean, I guess we are quite positive on consumption. Valuations aside, visibility of growth, clearly that's one sector which stacks up.
Okay, positive on technology, positive on consumption. By the way, a couple of more stocks to look at this morning. IDBI Bank, as we told you, there is a relief coming in there. The British court has ruled against Malia, and now his assets in England and Wales can be seized. So a couple of these banks are seeing a bit of relief, IDBI Bank, SBI, etc. Pramod, within financials, of course, the bias has been towards private sector banks, retail-focused banks. But what do you do now? Do you think the trend is changing a bit? Do you think money will come back into NBFCs and any of these corporate-focused banks that you would increase presence in?
No, I think at a time when you're looking at interest rates rising, you'd rather focus on financials which have a strong liability franchise, so that you can benefit from the spreads expanding and that flowing into earnings growth. So private sector banks with strong CASA franchises remain our preferred bet. Perhaps a couple of NBFCs who have that sort of a pricing power, but then again, if you're exposed to the bond market, then I'm not sure how much of that will be sustainable. So our preference will be towards private sector banks focused on CASA. PSU banks, although some of them you could argue do have generally strong liability franchises, but I guess there are other concerns which sort of override on them, and we tend to stay away from them.
Okay. Pramod, it's always a pleasure speaking with you. Thank you very much for joining us with your thoughts this morning. The market's at this moment flat at the index level, and even the Nifty Bank is rolling up quite a bit from the early morning loss. And at the moment, actually, you should count it as flat. It's about 50 points down. That's 0.2 down. So not much by way of losses. Market's taken the crude news in its stride, as it were, with metals and IT providing a lot of support to the indices. Well, with that, let's shift to corporate earnings analysis. Sadbhav Infra is the first of the companies we're analyzing today, reported a mixed set of numbers. while the company saw a near doubling of the revenue led by new projects, margins were significantly lower. Nitin Patel, Director, Sadbhav Infrastructure, joins us on the phone line. Good morning, Mr. Patel. First up, if you can tell us how the order book is looking. Can you maintain this kind of a revenue run rate?
See, fine. First of all, I would like to mention that the hybrid annuity as a revenue for operation and maintenance, as well as all the operational projects. So we are of the view that coming 3 years, the revenue visibility is clear. And also considering the big pipeline of the hybrid business at all, basically from the NHAI, we are of the view that the run rate will continue for the coming period of time.
So as in every quarter you will be able to you'll be able to generate 760 crore?
See, actually, this is including the revenue from the construction. So that obviously coming 3 years, we will be able to generate that revenue. And I think that for FY19 and FY20, it will further improve. And we are of the view that it will increase by at least 15 to 20% basically for coming quarters.
Okay, so 15 to 20% growth in revenues for over the next 3 years is what you said, right?
Obviously, say coming 8 to 10 quarters, because the under construction hybrid annuity are going to basically complete within 2 to 2.5 years from now.
Okay, so can you give us the exact numbers? What is the order book currently? What was it in Q4? And what kind of visibility would you have over the next 1 year?
See, actually, the order book basically splits into two parts. One is the construction of hybrid annuity, which is being carried out by Sadbhav Engineering. However, as per the Indian accounting standard, we have to book as a revenue and also as a construction expense under. That is one part. And second, operation and maintenance activity during the construction period of all these hybrid annuity. So both put together, I can say that the balance in the books of SIPL basically will come almost around 8,000 to 8,500 crore for coming 2 to 2.5 years.
Okay. When do you break into the black? I mean, you're still reporting losses, even if they are slightly lower.
See, actually, if you see basically the year on year, basically that losses is getting reduced. Basically, mainly because of the finance cost has come down, the operational revenue has increased, and second thing, most important, basically, if you see that the construction cost all put together and operation and maintenance revenue is also increasing significantly. So if you see the finance cost which has came down for the FY19, because last FY18 we have completed 4 projects of the finance refinancing, almost around 2,500 crores. So we expect that this will further basically improve the cash generation for the FY19 and 20 coming together.
Okay, so what is the debt now on the books? I mean, has it gone down over the last few quarters, and what's the trajectory looking like?
See, obviously for operational projects, we have repaid around 150 crore from the, basically as per the required repayment schedule, because this all is the asset business, and under all the operational assets, the due date is as of now around